Carl, thank you so much for joining me today to talk a little bit about life insurance. It is my pleasure to introduce Carl Ivy. Carl is a life insurance advisor of 48 years. He holds the industry's leading credentials for professionalism and outstanding service to customers, including Chartered Life Underwriter and Chartered Financial Consultant designations. Carl has truly been a real asset to me and my team in providing the highest level of customer service. Please join me in welcoming Carl. Good morning, Carl. It's a pleasure to have you with us today.
Good morning, Leticia. Thanks for having me. I appreciate this.
Of course. So, Carl, I have some questions for you that I know that you're going to be able to answer for us. And these are just questions that we hear often, and we go through we go over with our members often. And I really wanted to get your perspective as well. And I wanted to hear it from you. And I think that, many of my members and our followers, they're going to also want to hear the answers that you have for us with your designations. There's no one better to ask than you. So, you ready for some questions today?
Well, I'll do my best.
All right, Carl. So many people talk about how they have life insurance at work and that they don't need any coverage outside of work because their employer takes care of it. Can you share with me why it's so important that people know they cannot rely on work coverage to support their family?
That's a great question. And I certainly do hear that quite a bit in my work with people. Leticia, I would say there are four things that people should think about when they're thinking about their coverage for work. One is, if you leave your employer, that coverage doesn't go with you. So it's not a lifetime policy. Your employer owns that. You don't own it, so Sure. It belongs to somebody else. But the other thing is, speaking of the employer being the owner of that coverage, even if you don't leave, the employer could decide at some point in the future not to offer that benefit anymore, and that has happened at many companies. I was in someone's insurance office. That's about 6 months ago, and a random person just came into the office. Had been going home from work, saw the insurance sign on the door, and stopped in to find out about life insurance, and said they just told us at work today that they're not going to continue life insurance for us anymore. So, without owning the coverage, you have no control, and you don't know that it's going to be there when you need it. Another thing that people would never think about unless you experience it is that if you were to die, your survivors are going to be talking to somebody that's not an insurance company. They're going to be talking to their employer, and unless they work for an insurance company, these people really are not that familiar with the coverage and how it works and the process. They are most likely, this happened to me in my own personal life, they're going to hand you off to the company that handles that benefit for them, to a third party, and you're dealing with somebody long distance who's a stranger who doesn't know you. As opposed to if you have your own local agent, somebody that knows your family, somebody that feels your loss, maybe not to the extent of your family, but feels it with you, the amount of promptness of service is quite a bit different. And that comes at a time when your family, your survivors, need that care. So that's another thing. And all of that is as true as all of that is. The biggest reason is someone's in my, you mentioned my 48 years. I have never seen someone in 48 years that has the amount of life insurance at work that they really need to do the things they want to have done if they were to die today. Our work life insurance is a great benefit. I wish everybody had it, but it's not enough.
So true. Thank you so much, Carl. That's awesome. I have another question for you. Are you ready?
Well,
okay. Carl, it is really easy to confuse the difference of life insurance and mortgage protection. Can you share with me the differences of those two?
Sure. And that good questions, Leticia. That comes up quite a bit in talking with people. So mortgage,
yeah, it does.
There's two kinds of coverages that are referred to as mortgage insurance. And so and it can be very confusing because they go by the same names. One is if you go to finance a home through a lender and you are going to make a down payment of less than 20%, then the lender, the bank probably, requires that you have something that's called mortgage insurance. And the purpose of that is if you default on the loan, whether you're alive or you're dead or alive, but if you default on the loan, that reimburses the bank for the balance of the 20% down payment that you did not make. So then they call that mortgage insurance. But there's something else also that goes under the name mortgage insurance, and that is actually life insurance that you can get through the bank that you pay for as a percentage rate on your loan. So whatever your loan interest rate is, they'll add a fraction of a percent to your loan and then cover you with life insurance. And that is what you and I talk about, mortgage life insurance, not mortgage insurance to pay the down payment off if you default. But this is actually if you die. There are two things about mortgage life insurance through your lender. One is at your death, the beneficiary of that is the lender. Your family has no ability to say, we need a part of that money for emergencies or for things that we cannot escape. That money belongs to the bank or whoever the lender is. The other thing, though, about that mortgage insurance that's attached, mortgage life insurance that's attached to your loan at the bank, is it's very expensive because everybody qualifies for it. So my recommendation to people when I work with the public is if you are uninsurable, if your health is not good enough to where you can qualify for individual life insurance on your own, then get that through the bank. Because if you die, the house will be paid off. But if you are able to qualify for a life insurance policy of your own, it's less expensive. And if you want to make the bank the beneficiary, you can do that. But if you want to make your family the beneficiary and let them have access to that money and maybe make mortgage payments as they come due and hang on to the balance of the money, that gives your family options. So your own personal mortgage life insurance is by far better than anything you'll get through the lender.
Oh, that was awesome, Carl. You did a fantastic job explaining the differences. I get this question all the time, and it is confusing because it's called the same thing.
Right.
Really. But I guess it just depends on who's asking it. So thank you so much. That was very helpful. The other question that I get, Carl, a lot is, related to, why have the coverage, right? And why have life insurance? Why is it important? So can you give me 3 reasons why you recommend that people review their life plans with their life agent on an annual basis?
I can give you 4.
Okay, give me 4.
So it's kind of like one big umbrella reason and 3 reasons why that's important. The big umbrella reason, or what I would call the 4th reason, is none of us, me, you, nobody. We don't know what we don't know. And life insurance is not the most fascinating subject to almost anybody. So we don't pay a lot of attention to it. And so things that we don't think about or take for granted, we just don't know what we don't know. And our life insurance is by far our most important insurance coverage. Our life insurance is the coverage that guarantees everything else that we insure. So we insure our home, we insure our car, we insure our personal property. If it wasn't for us, those things don't exist. So our life insurance makes everything else possible that we insure. So that's the big umbrella reason. But more specifically, there are 3 things that people, if they are sure they understand these and they've checked these boxes on their insurance program, then they can know that even though life insurance might seem like a confusing subject to them, they can know that their life insurance plan reflects and will actually do what they would like to have done. So the first of those 3 is the money going to the right people? In other words, do you have the right beneficiaries listed on your policy to get your death benefit when you die? And at first glance, that might sound like a no-brainer. Well, of course I've got the right people. Why would I list the wrong people? But there is very good data, Leticia, to suggest that something like 20% of all life insurance coverages have the wrong people listed as beneficiaries, or at least don't have all the right people. And that happens really for 2 reasons. One is things change. If people set up a life insurance policy, maybe they get the beneficiaries listed exactly right. and things change. Beneficiaries die, people get married, people get divorced, maybe get remarried again. They have children in the future or grandchildren in the future. And in addition to that, over time, it's not unusual that people's intentions change. How people feel about others in their life changes. There may be somebody that you want to have as a beneficiary on your policy now that you really didn't at the time you set the policy up, or it can be the other way around. People you put on the policy that you don't want to have on there now. So the first most important thing is, or one of the three, I don't know if it's first, but one of the three really critical things, be sure that you have the right people listed to get the money. And when I'm working with the public, I see this all the time, that people, we look at their beneficiary designation and it's like they go, oh my goodness, that's not what I thought we changed that. That doesn't change by itself. The other thing, thinking about the people that are going to get the money. So the number two thing I'll mention with you is the money going to go to those beneficiaries in the right way? And what I mean by that, if you don't specify in your beneficiary designation how you want the money to be paid to people, the default option is single lump sum payment. And if you think about the people who you have as your beneficiaries, and think about what experience do they have handling tens or hundreds of thousands of dollars, or maybe even millions of dollars, depending on how much your life insurance is. What real life experience do they have managing those large lump sums of money? And also realize they're getting that lump sum of money on what probably is one of the worst days of their life, shortly after you've died. So, instead of putting the people in a position to where they will make mistakes, maybe even fall victim to someone else who knows they have this large lump sum that's going to talk them out of it or have them misspend it. Instead of that, you can write into your beneficiary designation how you want the money paid out. So there's a lot of options. One thing you could say is, I want my beneficiary to have a lifetime income. So whatever the amount of money is you're going to leave to them, that can be converted into a pension-like lifetime income where you get a check every month the rest of their life. They can't be talked out of it by somebody. They can't blow it. They can blow it every month as they get it, but they can't blow the whole lump sum, at a time when they're grieving and mentally just not at their best because of the death. You can have the money instead of a lifetime income. You could have it paid out over a fixed number of years. Maybe you want a monthly income to somebody for 10 years or 5 years. We have customers sometimes that will say, there's going to be some immediate expenses because of my death. I want 10% paid to my beneficiaries immediately so they can take care of the emergencies, and then the rest of the money paid over whatever period of time. So being sure that you have the right people listed. I mean, you get life insurance with some intention of having an impact on people you love. And so you got to have the right people listed for that to happen. And it also has to go to them the right way in actual practice. And I could tell you stories of beneficiaries that have gotten lump sums of money that should have lasted forever, because those sums of money were that size, that were gone in a matter of a year or 2 years. And it's
wow.
Tragic. So the third thing, if it's important the money goes to the right people, and it's important that it goes to them in the right way so that they can manage it effectively, it's also important that it has to be the right amount of money. And we could go into how you figure that out, but this is where this conversation is where a person's life insurance advisor, someone like you, can be indispensable in helping people be sure that they have their life insurance exactly how they want to impact people's lives if they're not here in the morning. And the shocking truth, and again, I said people don't, we don't know what we don't know. The actual reality is 1 in 7 people do not live to age 65. And what's significant about that is nobody thinks they're the one.
Right.
So I have encouraged people before to think about what would be the worst mistake to make, is to sit down with your life insurance advisor, be sure everything is in order, just in case you are one of the 1 in 7, and then you live to be 100 years old or longer. So what would be worse, that having happened so you find out you didn't actually need to do that because you lived forever? Or would it be worse for you to not sit down with your advisor and take it for granted that everything's just going to work out somehow, And then you actually are one of the 1 in 7. It costs the people you love the most everything, potentially. So sitting down with your life insurance advisor, Leticia, sitting down with someone like you, who can help people sort it out. It's a painless process. It's an easy process, and then people can make informed decisions. So having that review, it's not as fun as some other things that we could do, but it is such peace of mind. I have seen people get up from that review with a look on their face like it's been a very significant load off their shoulders to know that everything is taken care of.
Sure. That's awesome. That's awesome, Carl. Thank you for that too. That was a lot of reassurance as far as why people should be reviewing their insurance annually. Thank you. So I have one last question for you. Cruising through these fast. Can you give me 3 reasons why people should have life insurance? And if you wanted to give me a 4th, that would be fine too.
Well, so when we talk with people about what they want their life insurance to do, because in these consultations, our role, my role, your role is to help people do what they would do if they knew what we know. So we try to help people come to their own conclusions with our knowledge and information. But in that discussion, what generally comes up with most people as their number one thing that if they were not here in the morning, that they want to be sure their life insurance does is pay off the mortgage for the family. They want the mortgage paid off. If there's no mortgage, they want a rent fund they want housing assured for the family, someplace to live. So that's according to the people that have life insurance, that's the most important thing to them usually. The second thing people think about is if you think about your income, your monthly paycheck, a part of that goes towards the mortgage, but not all of it. A lot of that, probably most of it, goes towards daily living expenses. So there's food, and there's utilities, there's bicycles at Christmas. So it's possible with life insurance that if you're not here tomorrow, your life insurance can step in and provide the things for your loved ones that you're providing for them today. And that really is the purpose of life insurance. So a monthly income. So the number that you asked for, 3 things. Number 1 is paying off the mortgage or taking care of housing. Number 2 is a monthly income so that people's lifestyles can continue to be like you would like them to be, like you would like them to live. Mm-hmm. And then the third thing is, and this is the least of all of them. There's some other things we could talk about, but the third most common thing that people talk about is money for final expenses for funerals. But again, in the scheme of things, of everything that we look to our life insurance to do, that is the least expensive thing, but it is one of the most important on people's minds.
Wow, thank you, Carl. That was awesome. I think that. I mean, these are like I would say the real top questions that people ask, and it's every day, right? We get one of these or 2 of these, and I couldn't have driven it home any better than you. So thank you so much for taking your time with us today and sharing your perspective and some tips on life insurance in general. I really appreciate it.
It's a pleasure being with you. Thanks for having me.
Take care.
Bye. Bye-bye.